Hey guys, welcome back to Sky Talks Trading. My name is Sky and I'm on a quest to invest, and I'm not a financial advisor, but I'm still taking this quest anyway. Today's video is all about CEI Stock, Camber Energy. And if you stick around to the end, I'm also going to be talking about another stock, kind of an unexpected stock that I am very bullish about. And also, just because I'm in a chatty mood today, I'm going to be talking about 3 dividend stocks that are all under $10 and are paying out kind of a very generous dividend. So let's get into it. First off, CEI Stock. So I think that all the hype going around about Camber Energy is definitely more than a meme stock, because it all just makes sense. It's in a very relevant sector right now. Oil and gas, the energy prices are absolutely soaring, and I don't think that's going to end anytime soon, especially with it being the cold winter months. I always forget how cold winter is. So yeah, firstly, oil prices have been sharply on the rise since the spring, like March and April of last year, but particularly so since late 2020. And then also when it comes to the gas, vehicle miles traveled ramped up hugely from their lows, and they're continuing to make progress. So yeah, it's only logical that oil and gas plays moved higher, and CEI stock is along for the ride. Also, demand for natural gas has been on the rise, thanks to a combination of increased activity, higher personal savings, pretty much due to the lockdowns. That's one thing you can say. A lot of people did save money. And also the colder weather season's fast approaching. And I think what could really send CEI stock prices to new all-time highs is an unusually cold winter. It's not something that we're usually hoping for, to be honest, but it could really send it over the edge. And according to 2022 Old Farmer's Almanac, which is like the go-to place for all things weather and gardening and stuff, readers are warned to prepare for a season of shivers. And it also said winter will be punctuated by positively bone-chilling below average temperatures across most of the United States. So if that is indeed the case, and they usually know their stuff, demand for heating fuels could skyrocket, which is exactly what speculators of this stock are hoping for. But obviously on its own, will that be enough? A really cold winter? Maybe not. But there's also another bullish sign, and that is that CEI is in the middle of forming an ascending triangle formation, which, if you know anything about technical analysis, is a very positive sign and has very bullish implications. Basically, if a horizontal line of resistance forms at $2.50, while CEI continues to print a series of rising lows, it is more than possible that at the culminating apex point, the equity unit could break out. So it would be difficult to talk about Camber Energy without talking about Viking, because Camber owns a 62% stake in Viking, and the two companies have agreed to merge. In 2020, Viking produced over 624,000 barrels of oil and 5.2 billion cubic feet of gas. It sold much more, moving 24 million barrels of oil and nearly 9.4 billion cubic feet of natural gas. So those are pretty healthy numbers. And then on August 24th, Viking Energy announced that it had agreed to license a carbon dioxide capture system from ESG Clean Energy. You see, Senator Joe Manchin, who's key to passing 2 bills that the Biden administration and congressional Democrats are trying to get through, is a big fan of carbon capture technology. So that bodes very well for CEI stock. So, it will likely be able to obtain a pretty significant amount of money from the federal government as a result of the new budget, which is also referred to as the social spending bill. And Camber, in turn, should get a boost from Viking's payday. And then, of course, there is the fact that it is a Reddit's favorite. Camber stock has with over 8,000 members. So bottom line, CEI stock is definitely worth a second look. I think it has a very bright future. So let's talk about 3 dividend stocks under $10 with at least 8% dividend yield. First, we have SACH, Sachem Capital, and this is a real estate investment trust. These companies are well known for giving out very nice dividends because of a facet of tax regulations that requires them to return a certain percentage of earnings and profits directly to shareholders. Sachem is a Connecticut-based company, and they specialize in first mortgage loans. The company's portfolio is based on short-term secured non-banking loans made to real estate investors for the sole purpose of funding acquisitions, renovations, building rehabs, and development in both residential and commercial areas. They will be releasing the Q3 21 numbers on November 17th. And ahead of this Q3 report, the company has declared a current dividend of 12 cents per share. Next, I'm going to be going through these pretty quickly, and you can do your own further due diligence on them if you wish. Next, we have Manhattan Bridge Capital, and the ticker for that is LOAN. And they are a micro-cap lending firm based in New York City, and they focus on short-term secured hard money loans. And just like Sachem, Manhattan Bridge loans are used for first mortgages, usually by real estate developers. The typical collateral offered on the loan is tradable stock or real estate. The recent Q3 results showed 1.63 million at the top line with EPS of 10 cents. And at the current rate, the dividend annualizes to 50 cents per common share and gives a yield of 8.1%. And lastly, another very similar stock, New York Mortgage Trust, NYMT. And New York Mortgage Trust maintains a portfolio valued at $3.2 billion, which leans heavily, like 49%, towards residential mortgage loans. And another 15% is made up of structured multifamily investments. That is loans to developers to build apartment complexes. And 22% of the total is residential mortgage-backed securities, and their dividend is a solid 9%. And finally, the last stock I want to talk about, it's not a dividend stock, is Crocs stock. I have never owned Crocs. My feet are just too cold generally for that, but I actually do like the way they look. I know it's a very controversial topic. So if we just look at some key points from their latest earning report, revenue soared by 73% in the latest quarter, well ahead of expectations. Earnings per share also beat analysis target by at least 30% for the 5th time in a row. They are really on a winning streak. And they also overcame supply chain shortages to meet booming demand. And management boosted the low end of its 2021 revenue guidance. Crocs stock has more than doubled this year, and it's nearly a six-bagger since the start of 2019. And did you know that Crocs actually has better margins than Apple? So that's all for today, guys. Thanks so much for listening, and let me know all your thoughts in the comments below. And until next time, have a great day.